This is not financial advice. This is not legal advice. It's for entertainment and educational purposes only. And everything I say is my opinion. Please don't make any financial decision based on anything I say in these videos. That being said, hit the like button, subscribe button on the YouTube algorithm stuff. See what I'm thinking, see how I'm analyzing that data. But like I tell every day, the data they release us is false. Listen, after looking at everything that's been going on in the market since Friday, and then looking at all these different coins that's on the market, looking at what FTX did, and this is just my opinion, please don't make any financial decision based on anything I say in this video, but this is how I see the crypto Ponzi scheme working. Okay, this is just my opinion. Do not make any financial decision based on anything I say, but this is how I see my analysis, how I see the crypto Ponzi scheme working. Okay? You got FTX, and their coin is FTT, and they use Alameda to sell it, to push it. But this is how the crypto Ponzi scheme worked. This is what I think FTX did, and this is why this thing, what we're seeing is just the tip of the iceberg. It's going to get a whole lot worse. It's going to take down some major companies. It's going to take down some major hedge funds, and it really needs to take down the SEC, because all of this is the SEC's fault, but that's just my opinion. But this is how I believe the crypto Ponzi schemes work. This is just Donahue George's opinion, okay? You got a developer. He makes a coin. Say it's ABC coin. Developer makes ABC coin. Just like FTX made FTT coin. Then what the developer does, he either gives it to somebody in the industry or he sells it to them for next to nothing. Next to nothing. And then the person they give the coin to, he calls his homies, his buddies, that's in the same arena as him. And they conspire together to push the price of the coin up. So the coin that started from zero and given to developer, to market maker number one, or hedgy number one, or institution number one, they get it and it's worth $1. Say they paid $1 for it, if they paid anything at all. Then they sell it to their homie for $10. And then this homie, he sells it to somebody else for $50. And then next thing you know, he sells to his other homie for $1,000. Now they all know it really has no value, because the value is determined by the market. But these guys are creating the market by selling it between each other, kind of like what they do in the dog pools. This is just another kind of dog pool, but this is less regulated. But we all know regulations don't matter because the SEC doesn't enforce the law. But they take something that started with no value, has nothing behind it, isn't supported by anything at all. There's no gold behind it, no silver, no US dollar, no real estate. There's nothing of any tangible value behind this. They started with somebody on blockchain making a coin. They give it to their homie in the industry, and then they keep selling it between each other, pushing the price up. Now, if the price keeps going up in a market that they created, then other market participants are like, whoa, that ABC stock is doing well. Maybe I should get in. And what FTX did, they gave it to Alameda, and Alameda started pushing the FTT. And because the market participants were looking at the FTT going up, they were saying, maybe this is about to run. Maybe I should jump in. But where does the value of this coin come from? It comes from nowhere. It just comes from these guys selling back and forth between each other. And then you know what they do? After they push the price up, after they get market participants and retail investors and pension funds to invest in this garbage, they get rid of the shares for real assets. They traded for probably Bitcoin. They traded for gold. They traded for silver. They traded for real stocks and real companies. And then, being that they're not paying for the coins. They're not paying for the coins. They're just making it in a computer. So when you look at the market cap of the coin, or you look at their books, their books say they hold 20 billion FTT coins or 20 billion ABC coins. And because they artificially pushed up the value, you say, this company's worth some money. This company's worth billions of dollars. Look at the market cap. The market cap of this coin is $500 billion, and they own half of it. But they didn't pay for those coins. They just made them in a computer program. Whether it's FTT, whether it's ABC coin, whether it's XYZ coin, these coins have no value. And this is how the crypto Ponzi schemes work. They start with nothing. They artificially push it up. Then they get market participants to think it has value. And then after they get it out there in the market, they slowly sell off their coins while they're making more fake ones to make it look like they're holding onto their coins, but they're not. They're selling them off. And that is why we're in the situation we are now, because when these guys when Binance looked at FTX books, they realized that they were running a Ponzi scheme. They realized it was fugazi. They realized they had no value whatsoever. And then on top of that, all the counterfeit AMC and GME shares that they were using for the tokenized stocks. I mean, it's just one big fiasco. One big problem that the only way it gets fixed is for the whole market to crash, and I believe it's going to crash. And when it does, AMC, GME, and all the mem stocks are going to go to the moon, and we are going to get our attendees. Anyway, hit the like button, subscribe button, all that YouTube algorithm stuff, and tell me what you think about these bad actors creating crypto out of thin air and becoming billionaires. Anyway, have a great day. God bless, and I appreciate y'all on this journey with me.